Well, hello everyone. Welcome to today's webinar. I'm Denise Evans, a project sponsor working with high net worth individuals on projects that have above average returns and expanding attainable housing options. To paraphrase what Warren Buffett famously said, rule number one is don't lose money. And for rule number two, refer back to rule number one. So this philosophy guides how our team approaches every project, striving to prioritize both opportunity and risk management while staying fully compliant with securities regulations. One way we do that is to work with an exempt market dealer or an EMD. Today, we're excited to speak with Alexander Morsink, co-founder of Equivesto, an exempt market dealer that helps investors access private investment opportunities in Canada. Our focus today is on education, understanding how private investments work and how an EMD like Equivesto adds value to both investors and project sponsors. Welcome, Alexander.
Thank you, Denise. It's great to be here.
Thank you for joining us. I'd like to give you an opportunity to tell us a little bit about Equivesto and your mission.
Absolutely. So Equivesto is an online investment platform based in Canada by Canadians for Canadians, and we're licensed, as you said, as an exempt market dealer. We specialize in helping great projects like yourselves raise capital from investors across the country and facilitate an easy, smooth online investment process for investors and issuers raising capital. The idea is you should be able to access, but also get signed up for and invest into interesting and different private investments without a ton of overhead and hassle.
So, how exactly is it that you make private market investing more accessible for everyday investors?
Great question. So if we look at the traditional structure of private capital raising, let's say we go back 10 or 15 years, essentially, if you wanted to invest in private investments, you would typically have to be directly connected to the founder of the company itself or already within a specific personal network knowing that specific business. Then to go forward with the investment, you would be meeting at a lawyer's office, going through copious amounts of physical paperwork, wiring funds from your bank account. It would be very sort of manual and intensive. By creating an online investment platform and automating much of the process, making it digital, making it easy, we're now in a situation where investors can create an online account in minutes, get approved for investments that are suitable for them, and then proceed and complete an entire transaction fully online, digitally, without needing any additional steps. So you don't have to go to the bank, you don't have to, print out any forms. All that's taken care of by the platform in an online capacity. Then it makes it easy for you as an investor to log back into the platform and you have all your document records there saved for the foreseeable future. That way you have access to all the materials and you know exactly what's going on. Once your transaction is complete, then the relationship moves over to the issuer itself. So if you were to choose to invest into Denise's project, then you would be getting emails from her and her team about the different projects, the progress, and any other information pertaining to your eventual potential returns.
In my conversations with investors, many are not familiar, although they may have made private investments because they're familiar with a particular project or a founder, as you mentioned. Many are not familiar with the role of an EMD or the qualifications, what it takes to be an EMD. How do you get qualified to be an EMD?
It's a great question, Denise. An EMD or exempt market dealer is a financial institution licensed and regulated in Canada. So essentially, no one person can be an exempt market dealer. No human is an EMD. The EMD refers to the corporation, and it's a financial institution like a bank or like any other securities dealer. So the corporation itself has to become registered. The list includes thousands of individual items, including specific individuals and employees of the corporation having certain degrees, licenses, approvals to operate in different capacities. It includes ongoing audits and reviews by the Securities Commission, audited financial statements, ongoing reporting, maintaining and tracking all sorts of details of client funds, holding document records for 7 years. It's basically like setting up a very miniature bank. So no one person, of course, can be a bank. It's a similar type thing. Now, with regards to the role the EMD plays in the private investing space and what exactly an EMD does, exempt market dealers are charged with essentially 3 core responsibilities. The first is due diligence and verification, which we call KYP, or Know Your Product, of any offering that we want to make available to investors. So we have to do a comprehensive due diligence into any deals that we make available, including ones like Denise's, to make sure that all of the information that's being put forward to investors has been reviewed and verified. So an investor like yourself knows that you're participating in a real offering, nothing is fraudulent, but also the details and the information put forward is put forward responsibly and with truth behind it. So that's one responsibility. The second responsibility is actually on the investor side. So we're responsible to complete KYC, or Know Your Customer, review of the investor, as well as a suitability and an eligibility assessment. Essentially, we need to get to know all of our investor clients and make sure, one, they're suitable for these private investments, they understand the potential risks and potential positives associated with them, and we have to set individualized recommended investment limits so people understand where we recommend private investing can fit within their investment portfolio and what might make sense for them based on their personal situation. This assessment does get quite detailed. So we're collecting information on your spouse, if you're married, your employment situation, any dependents you have, your income, your assets, your previous investment exposure, and even more details. We also need to collect personal financial documents to actually verify that you are qualified for certain types of investments, including yours. So that is a very comprehensive review that we do on all investors. That would be our second requirement. And the third is actually the protection of the private market itself. Essentially, we need to monitor and control the actual transaction so that the right documents are signed, the right disclosures are signed, but equally as importantly, the money is moved in the right direction to the right people. It doesn't get waylaid or lost anywhere. And it's done in a way that is very clear and transparent for all involved. An exempt market dealer is protecting the business and doing a review of the business. It's protecting and reviewing the investor, and of course, navigating the entire transaction process.
Yeah, and as a project sponsor, we chose to use an exempt market dealer. Sponsors do not need to or have to. They should. And the benefit to us has been that with dealing with you, you have challenged us to provide all of the documentation that demonstrates that what we are saying has integrity, that our project has integrity, that our project team has integrity. And at the same time, we are confident that when our investors fit the requirements of securities regulations in Ontario. So if for our particular project that we currently have with you, it is strictly for high net worth individuals, accredited investors. And so we are confident that they meet that requirement and therefore will not jeopardize or cause any risk to the project or to other investors, because those kinds of things can become an issue if someone says, you shouldn't have taken my money because I don't qualify. Even though I told you I did, that was your problem. So we really appreciate the role that Equivesto plays in that. And you kind of indicated all the roles. The due diligence process that we went through was quite extensive. We had to demonstrate that all of our previous projects, we had to provide you with evidence of all of those things so that investors can rely on what we are presenting to them. And in fact, all of our investor-facing marketing or material, brochures, emails, so on, we run through you so that we are in compliance with securities regulations. And you ensure that that's the case, and you're very quick on the turnaround. We really appreciate that. The due diligence process was, can you describe for us how long it generally takes for a project to get listed on your platform? And maybe
Absolutely.
before I mention that, I should say that Equivesto does have a website and a platform where all of the projects that they have vetted and have agreed to act as exempt market dealer for are on their website. Can you tell us a little bit about how long it takes for a project to get listed on your platform?
Absolutely. As, of course, an exempt market dealer, we have to complete a comprehensive review and assessment of any offering we want to make available to investors. And we discuss and meet with many, many offerings that we do not choose to make available to investors for a variety of reasons. For an offering that we do decide to move forward with, it's typically between 6 to 8 weeks on the short end to complete a due diligence and bring the offering to market. Sometimes it can take much longer. Sometimes it can take 6 months or 7 months, depending on all the different pieces of the offering. And exactly as Denise said, as the exempt market dealer, we are primarily focused on really verifying the information that the issuer puts forward. There is no way to guarantee forward-looking statements of any kind, and so those should be reviewed carefully and with that in mind. But we want to make sure that when you're receiving materials as a potential investor and they're making statements about, I've done XYZ deals before, or I have this personal experience, or the project is set up in this area, or we own this land, whatever it may be, that those things are verified as much as possible. So any material that an issuer wants to make available to an investor, we start by looking at that and making sure that has all been verified. And then, of course, spending a considerable amount of time looking at the structure itself to make sure that is properly reflected and presented to the investor in an honest way. When it comes to any materials that may be provided from a more marketing perspective, exactly as you said, Denise, we need to make sure that they're not misleading and they're presented honestly and in a straightforward way and are not misrepresenting both the potential risks and potential benefits to any one investment.
So from our perspective, that we really think that the balance between an opportunity and responsible management is key. And thank you for walking us through that. That was really comprehensive. I think our viewers will really appreciate understanding the behind the scenes work that goes into projects like ours to be compliant and well structured within Ontario securities regulations. From my experience as both an active project sponsor and an investor, whether as a limited partner, a shareholder, or a general partner, I've learned that conducting effective due diligence on a project requires significant work, knowledge, and experience in the asset class or the project. Most retail investors or most private investors who aren't actively involved in a particular type of investment, whether it's apartment buildings, whether it's AI, whether it's whatever it is, digital products, or whether in my case currently the land investment or land entitlement projects, most retail investors don't have the time or expertise to do the due diligence. So can you explain why investors should work with an EMD? I think you've covered it, but why work with an EMD rather than going it alone?
Absolutely. So going it alone can certainly and is, of course, an option for everyone. And there are certain projects where the sponsor may have chosen not to work with an exempt market dealer, so you may have no option in that regard. But when you have the opportunity to use an exempt market dealer, the exempt market dealer, in many cases, and certainly with Equivesto's case, is operating at no cost to the investor. So the investor is not paying us any of the fees or any of our costs. That is covered by the issuer. As a result, the investor, in terms of the potential targeted returns, those are unaffected, and the amount they're investing is again unaffected by the presence of the exempt market dealer and represents essentially entirely upside for the prospective investor. If I was to try to do due diligence on a deal on my own, because of my professional experience, I would probably be able to do that. But it would take me, even with my amount of experience and know-how, it would take me considerably longer because I would then have to review and read every single document involved with the project, run background checks, call up and do additional interviews of other related parties. The amount of work to do proper due diligence can be very comprehensive. And it's not something that even someone with the knowledge that I have is necessarily prepared or available to do on any frequent basis. By working with an exempt market dealer, when you're looking at the offering information presented, you know that information has been reviewed and has been certified by the issuer as being correct. So you are able to essentially skip, running a number of background checks on Denise or her other partner members, reading through to make sure that, okay, if I'm being offered Class A LP units at this price, that the actual limited partnership agreement reflects those units and the rights that they say are represented in the term sheet are actually written inside the legally binding limited partnership agreement. The level of due diligence that you would want to do would be basically you just wouldn't have the time to do it alone. Not to mention, it's taken me, multiple decades to develop the skills to start and run Equivesto that, many of us don't have the time to do on their own. So it saves you considerable time and effort. So you can really focus on the critical decision-making point, which is, does this potential investment make sense for me in my financial position, for my risk level, and my financial goals? That's really the core decision that only you as an investor can make. And and essentially what we're trying to do is present that information to you so you can focus on the critical decision, not are all of these things true and everything before even getting to that decision point.
Yeah, I know that although we are working with a securities lawyer and are compliant with Ontario securities regulations and Canadian securities regulations, we certainly appreciate the insight and knowledge that your team has about securities regulations and ensuring we're in compliance. I've picked up the phone or texted you or called you many times to ask you for clarification. Before we invest time in taking on an initiative or doing an initiative or some kind of an awareness campaign or material, to ask, and also to ask you based on what's happening out there in the marketplace. So we do see a lot of value in our relationship with Equivesto. Can you speak a little bit to the different type of approaches that exempt market dealers use? Because with Equivesto, from our perspective, you do not market our project for us.
Correct.
You have conducted due diligence and you ensure that the investors that are coming on board are understand the risk profile of whatever the project is, understand the requirements, and that you ensure for us that they are in fact accredited. But there are other exempt market dealers that have more of a marketing bent. Equivesto does not. Perhaps you can speak to us a little bit about your philosophy on that.
Absolutely. So you brought up a very important point for investors to be aware of with regards to exempt market dealers. So the exempt market dealer license is quite broad and can be used in a very wide-ranging number of ways. Many, what I would call more traditional exempt market dealers, are almost what you would think of as a stockbroker, but for private investments. So there would be an individual person, a dealing representative, would have a Rolodex of investors. An offering would come to them and say, hey, I'm interested in finding $5-10 million. They would pay the dealing representative, and the dealing representative would pick up the phone or the email, and they would go through their Rolodex looking for people in their network that they think would be a fit for this investment. And that EMD would then be responsible for a lot of the marketing and sort of sales aspect of the capital raising, in addition to all of the remaining EMD responsibilities. Equivesto does not operate in that way. We operate primarily as what I would describe as a processing exempt market dealer. So rather than us going out and actively selling any one offering, we really focus on supporting the investors that are attracted by the issuers themselves through the entire onboarding, investor sign up, and investment process. Part of our philosophy behind that really stems from, to be honest, the fundamentals of how the private market works and how people get paid. In a sort of traditional exempt market dealer space, the salesperson is, of course, being paid for finding you the investor and bringing you in. They're being paid a commission on the sale. But that same person is also responsible with determining whether you are suitable and eligible to make that investment. Now, that creates a conflict of interest. And exempt market dealers, of course, disclose this conflict of interest to investors on their website. We, as an EMD, still have conflicts of interest that we disclose and talk about how we handle. But this core conflict of interest present in the industry of the salesperson is also the gatekeeper is, in my opinion, too large of a conflict to allow to be maintained. So Equivesto operates really from a processing perspective. So we still have exempt market dealers, but they are really focused on that suitability and eligibility assessment and essentially providing customer service to investors who are looking to invest but have questions and need help understanding the process and the documents. Our exempt market dealers are not paid a sales commission of any kind, and they are not directly benefiting by somebody making a larger or smaller investment. We want to make sure that we are focused on providing the best feedback around suitability and eligibility and really processing and supporting any investor who's coming through to participate in Denise's offering, rather than us also trying to convince or encourage people to participate in investing themselves.
Yeah, we made a conscious decision to use an exempt market dealer, and we did look at different dealers. For us, the benefit is, as a project sponsor, that we know that we can speak to our investors or potential investors with confidence about the product that we have. And there's a regulated entity, an EMD, that has looked at our material. And so our material, I was surprised at the extent to which the due diligence process and how long it took, because we had to come up with all sorts of documentation, including even proving our previous employment and our previous experience. So we had to go and provide that, as well as every other project that we had done that we were indicating as part of the thing that made us uniquely capable of delivering on the project that we have listed on your platform. The fact that you act as that independent party in these times was important to us, because there's been so much market uncertainty, so many losses, particularly in the real estate space. This gave us an opportunity to say, look, we have a group that you can go talk to about our opportunity. They don't market to you, but they will tell you whether we're direct, honest, correct in what we say. You make your own decision. They will tell you many times that any investment is risky. A private investment is risky. Any kind of investment is risky. You have to know that whether or not it's a suitable investment for you. And we have confidence in the investors that are coming to us, and the investors can have confidence in us as an independent party that has looked at our material. So we do find that very advantageous for us and for our investors. But what are some of the common misconceptions that investors have about private investments?
It's a great question. I think the first misconception, or the first area of confusion, usually is actually based around what even is a private investment in the first place. So most investors, or most individuals, when they begin getting exposed to investing, are dealing with the stock market, mutual funds, exchange traded funds, individual stocks or bonds. And all of those types of investments are typically structured and available through the public market, traded on the stock market. So what that means is you, as the investor, are buying or selling something that you can then turn around and buy or sell on that same market the following day. By being publicly listed, all of those investments also undergo an annual audit, and they're providing quarterly information updates with the goal of ensuring all market participants have access to the same information. So companies, you can buy and sell them all the time, and there's lots of information available about them. Private investing as a whole, before you even talk about an individual project, is extremely different. You're investing in, as the name says, an individual private offering that is not available for trading publicly. It's not necessarily providing ongoing audited financial statements and quarterly updates. So the information access is reduced and the liquidity opportunities are reduced. With a private investment, you are potentially locked into that investment for many months and or years, and your exit is entirely dependent on the type of structure that's being provided. Now, those are some of the challenges and risks associated with making a private investment, but also create opportunities for higher potential returns. If you're spending less money on all this ongoing reporting and all this access and everything, that means that you have more money to pass back to investors and also grow the business. In terms of the liquidity in the public markets, stock prices are going up and down all the time because people are able to buy and sell all the time. With private markets, you're not experiencing the same level of short-term fluctuation in price. So that's sort of the core initial misconception, is what even sort of is private investing. And then from that is really, how does the liquidity, how do I get my investment out? How does that work? And so the liquidity, how you sell your investment, how you get your return, is extremely investment specific. So you would need to look in detail at the offering materials presented by Denise or other sponsors or issuers to actually understand what are their goals for the project. When are they planning or targeting to pay out investors? What does that timeline look like? And does that make sense for you? Keeping in mind that timeline may change, but it's presented as a target or as a range. So keeping in mind that the liquidity profile is different is incredibly important.
Well, it's interesting because many people are familiar with the public markets, like stock markets. Most people don't know that most financial institutions, when they place their funds with those financial institutions, the advisors with those financial institutions typically have a book of investments that they promote to their investors. So most investors don't know that even on the public side, they get limited information. And I think most investors don't realize as well that most high net worth individuals, or on average, at least 50% of the investments that high net worth individuals make are in private equity and real estate, or it has been. We'll see if that changes with AI, and there's always alternatives. But the rest of it is the public markets form less than 50%, and there's a percentage of kind of alternative investments like Bitcoin, AI, and other things. Now, I'm not talking about Nvidia on the stock market, which has done terrific. That is a public equity investment. But most people don't know that in order to achieve higher returns, it does have some higher risk, but most of those risks can be managed with the right project, the right sponsors, the right approach. People have to make their own assessments of those and look at their risk profile. But most of those private investments offer the potential for a significantly higher return. So
you certainly raise a very good point there, Denise. Firstly, with the sort of relationship management perspective on the public side, yes, one common misconception is around the term financial advisor. Financial advisor with an E is a legally regulated term where someone actually has to provide advice in the best interest of who they're talking to. Financial advisor with an O is a title unrelated to any legal requirements put on the individual with said title. And so many of the larger financial institutions, their team of financial advisors are essentially actually selling financial products that they create. Many of those institutions, their financial advisors are only allowed to sell investments, mutual funds, ETFs, things like that, that are created and owned by that same financial institution. And so people might not realize that when they're speaking to those individuals, because they're represented as somebody providing investment advice rather than being a salesperson. But following on with your comment about the private markets, we do historically, and now historical returns are no indicator of future returns, but historically, the financial markets, the private markets, have been able to generate higher returns than the public markets. Again, with no guarantee of that continuing in the future, but certainly we do see a lot of individuals looking to diversify their investments, with the idea being, okay, if one area is not doing as well, hopefully I'm in a different area that's unrelated. And so it will either not do badly or will do well when one is doing not so well. So typically we see people who are in the public markets look to diversify some of their investments and also hold some investments in the private markets as well, just to have a more balanced portfolio.
Correct. And in terms of making any of those investments, it's always advisable to get legal or accounting advice. By using Equivesto, we have provided a certain level of due diligence for investors. Ultimately, it's up to them whether they want to participate with us or not, and whether or not they seek additional legal or accounting advice. I've seen a lot of really amazing educational resources on your website. So there's a lot of information there. We're dealing with high net worth individuals, so we have to follow a certain set of securities regulations. Other types of structures have other requirements. Equivesto provides a platform or an opportunity to have a look at those kinds of different opportunities there. Thank you for sharing your insights today, Alex. And for viewers who are interested in learning more about Equivesto, where can they go?
Absolutely. Thank you very much for having me, Denise. To learn more about any specific offering, of course, you can go to the Equivesto website, equivesto.com, and you'll be able to find the live listings there. But we, of course, as you mentioned, have a detailed learning center at equivesto.com/learn with, at this point, I think hundreds of hours of information and content, either in written article form, in videos, in audio content, really aiming to provide more education on the private investing space in general. How does it work? How to review and assess investments, whether investments may or may not be right for you. And of course, while this is not any accounting or legal advice, you should certainly seek that. If you are looking to ask specific questions about an offering, you can reach out to us directly, and we'd be happy to schedule a call with one of our licensed dealing representatives to speak to you directly about your personal situation.
Thank you very much. We're very pleased with our relationship with you. And again, our reason for putting this additional step into our project is in order to provide assurances for both our investors. I shouldn't say assurance, that I don't want to get in trouble with the regulator. In order to provide an additional layer of diligence for our investors and for ourselves for the project, to ensure that the project is successful and that our investors are suitable for our project. You mentioned about communication. We communicate regularly on any of our projects with our current status, and more broadly than just to our investor base. So you can find our project on Equivesto, equivesto.com. Alex, your brand name is on your Zoom window there, so everybody can spell it. Equivesto.com. Or you can reach out directly to me at Denise at thedeniseevans.com to learn more about our project. Once again, and Alexander, thank you so much for your time. Appreciate it. And I hope that gives people some indication as to what to look for and how to go about doing effective due diligence and getting a better sense of a project that they're considering participating in.
Fantastic. Yeah. Thank you again for having me, Denise. And absolutely, we're happy to help, and we hope everyone has a great day.
Thank you again.